So this is again just showing you guys the importance of understanding technical analysis from a logical standpoint, coupled with fundamentals, and utilizing no magic indicators or hopium bullcrap Fibonacci sequences. I cannot, I just literally cannot stress enough. People really need to wake up and tap into. Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to be covering some XRP technical analysis insights, going over some fundamentals that all risk asset investors should be paying attention to. And then towards the end of the video breakdown, I'm going to be giving you guys my price projections on XRP, given the risk on, risk off market sentiment that is set to potentially materialize towards the end of the week. If you all enjoy these video breakdowns, giving you guys educational insights into current market dynamics, do us a favor, smash that thumbs up button and subscribe to the platform. Now, before we jump into the technical analysis and the fundamental breakdowns, I want to show you all how long we've been tracking the price action of XRP over the past consecutive couple of weeks and how accurate it has been, not only publicly giving you guys these technical analysis callouts, but also in our private community. So here you can see we're going to start on this post from March 21st, 2024, where you can see I mentioned risk on, risk off market sentiment. And I just want to show you guys again how accurate our predictions are here at CYPRX, because we pay attention to fundamental factors that are actually driving price dynamics here in the digital asset space. We're not just looking at random Fibonacci sequences or some magic indicator that's gauging where price action is going, like RSI or moving averages or Fibonacci's, all this bull crap that these influencers use on the internet. We're actually giving valuable insights in the form of fundamentals, right? You guys can see over here on the left-hand side, fundamentals and sound technical analysis insights based off of discount and premium ranges. So looking back on the analysis that I gave you guys on the 24th of March, I was calling for a slight retracement down into the March lows of roughly around 56 to 58 cents for price to stabilize around those particular psychological levels and for us to see a retracement back to the upside. Fast forward to where we are currently at price action in time of recording this video breakdown, you can see that March 24th was here when I posted that out to you guys publicly on the X space. And sure enough, because of the fundamental factors that weighed on risk sentiment up from that current moment in time, you can see we saw that slight retracement down into the overall range of the March lows that I was projecting on that post that I put out to you guys publicly on X. I literally haven't deleted any of the analysis that I sent. And from those specific psychological levels, we saw some buyers' interest from around the 56-cent psychological level. And we saw XRP price top out roughly where we're sitting at now, almost at about 62 cents. So all in all, this analysis that I gave you guys publicly on the X space on March 24th, where I was projecting a slight retracement down into 58 cents, a rejection of roughly around the 58 cent to 56 cent psychological level, i.e. the March lows, for market makers to better position themselves for the new quarter that we are operating in now, has now materialized and come into fruition. All right. So this is, again, just to show you guys that we're not randomly projecting bullish moonboy targets. We're actually putting out logical and accurate technical analysis to you guys in advance. Now, not only that, but in our private CYPRX community, we go into so much more detail. Here you can see, just going all the way back to looking at the timestamps, okay, on Tuesday, April 2nd at 9:15 p.m., I mentioned to the private CYPRX community, same intraday analysis on XRP stands. I am bullish above 58 cents, looking for targets of the high 60-cent range. You guys can see that, right? Our original analysis I sent you on XRP is now coming into fruition, which was a deeper pullback down into the March lows of 58 cents for a potential sweep of liquidity. As of time of writing, prices held above the 58-cent psych level, which was my entry, with a stop loss at 55 cents. And I gave them this technical analysis insight once price action had come down into the March lows, letting them know that I was looking for buy scenarios to play out or a rejection of the March lows and for price to start to head and make its way back to the upside. All right. So you can see not only publicly was I giving you guys this analysis in advance, but also having been a member of our private community members had this technical analysis insight in advance in a more detailistic perspective with stop losses with entries and with targets. Okay. Now, obviously, of course, we have a little bit more in-depth breakdown via our psychological levels given by our delta zones via our institutional scalper. So if we head over here to the XRP private analysis section, you can see if we go back to April 2nd, okay, you can see the timestamp. I always like to provide timestamps to show you guys that we're delivering this information to our private community members well in advance. At 12 p.m. on Tuesday, April 2nd, okay, you can see here our institutional scalper was delivering these buy deltas on XRP at roughly around 55,827 and 56,321 as psychological levels to be looking at potential buy areas of interest. XRP price on April 2nd was hovering at around 59 cents, and the buy levels set were at 56,312. I want you guys to see how accurate this is. So remember, this analysis was given to our private community members on April 2nd, right? Not only that, but remember, the analysis that I gave to the private community members was also delivered on April 2nd. So if we head over to the XRP charts, you can see, looking down at the bottom of my screen, this is where price action was at on April 2nd, when we gave the deltas and my personal technical analysis to the private community well in advance, when price action was roughly around 59 cents. Sure enough, look at how accurate this is. Price action dips straight down into the 56312 psychological level 2 days after the analysis was sent to our private community on April 2nd. On April 4th, and buyers came into the market, and you can see price appreciation on XRP from roughly around the 56312 psychological level, i.e. the March lows that we had been calling out from all the way back on the 24th of March, giving you guys this projection where we are looking for a slight retracement all the way down into the March lows and for price to appreciate in value from those levels. And then from April 2nd, in our private community, given those call outs well in advance with the sound delta zones and the accurate levels to be trading from, all delivered to our private community members and publicly on X before the move played out. All right. So this is, again, just showing you guys the importance of understanding technical analysis from a logical standpoint, coupled with fundamentals, and utilizing no magic indicators or hopium bullcrap Fibonacci sequences. I just literally cannot stress enough. People really need to wake up and tap into what we're delivering here at CYPRX. If you actually want to become successful, ignoring all of the bullish moonboy hopium bullcrap, take it upon yourself and buckle down and educate yourself as to the information that we are bringing and providing with inside the CYPRX community and publicly to you guys on X and on YouTube. Okay, so check this out. Now we're going to get into the sound fundamentals as to what could potentially drive risk on and risk off market sentiment this week. And then I'm going to go over my personal price projections given the scenarios that could potentially play out with inflation data on the forefront this week. So this article from Crypto Globe was very interesting because some of the things that we've talked about in previous video breakdowns, the crypto market potentially set the decline amid Fed's cautious approach and reflation concerns. So we know over the past consecutive couple of months, what's been driving demand to risk assets as a whole. It has been this whole entire rate cut narrative that at some point in time, central banks around the globe are going to start to usher in rate cuts, leading us into a lower interest rate environment. That has been one, obviously, of course, of the many factors driving demand for risk assets all across the board. And so we need to continuously monitor that potential sentiment and if that sentiment shifts hands. Now, last week, we saw a continued risk on sentiment given some mixed data that we got from the US front. However, we saw some Fed speakers midweek, Fed Mester, Fed Daily, and Jerome Powell all continuously pump the narrative that at some point in time in 2024, the Federal Reserve is going to cut rates. So the market, i.e. in risk assets, is still holding on to that greed narrative. With that being said, this week, what do we have in focus? We have core CPI, we have PPI figures, we have unemployment claims, and we have consumer sentiment that could all potentially shift that risk on market environment that we're currently operating in if we see higher inflationary readings, we see upbeat labor market data, and we see upbeat consumer sentiment all weighing on the rate cut narrative, pushing that narrative back further which would then most likely lead to a hawkish sentiment from Federal Reserve speakers, weighing further on the rate cut narrative, dampening risk on market sentiment. This is why it's extremely important to be paying attention to these things. So, with that being said, I've drafted out a fundamental piece for you guys. Pay attention to what it is that I'm saying. Again, it is very boring information. I get that. It's not your normal bullish average hopium $100 XRP price prediction crap that you see on the internet, but it is valuable education that everybody should be paying attention to. And hopefully, if you've been following along with us here at CYPRX, you've been seeing how accurate this information is. This, again, has to do with understanding the environment in which we are operating in now, which is a trading environment. These digital assets, particularly like XRP and other utility-driven assets, are not being utilized for their utility. I'm a firm believer that at some point in time in the future, these digital assets will be utilized for their utility, and we will see massive price appreciation. Again, not financial advice, but that is going to be some point in time in the future. Right now, we are operating in a trading environment, which means that these risk assets, i.e. crypto, operate off of risk on, risk off sentiment. So pay attention to this stuff. It is extremely important. So this upcoming week holds significant implications for risk assets and the overall trajectory of the market. Our attention will be squarely focused on key economic indicators such as CPI and PPI figures, unemployment claims, and consumer sentiment. Additionally, we'll be monitoring speeches from various Fed officials sprinkled throughout the week. An ideal scenario, so this would be the most favorable scenario for us as risk asset investors if we want to see intraday buy scenarios or bullish price appreciation on the overall cryptocurrency market capitalization as a whole, not just XRP, but XRP included. So an ideal scenario favoring risk on market sentiment would be for us to see a decline in inflation readings across both CPI and PPI figures. This would align with the narrative of potential Fed rate cuts, consequently fostering dollar weakness and bolstering the strength of risk assets. Furthermore, we would also like to see higher unemployment claims, indicating labor market weakness, coupled with subdued or lower than expected consumer sentiment, alongside dovish remarks from Fed speakers. This would further support a risk-on market mood and most likely lead to an increase in the price of cryptocurrencies and stocks, i.e. risk assets. Now, obviously, of course, this is a fairy tale scenario. For us to see all of this one-sided market volatility, strength in risk assets, and weakness in the dollar, we cannot confirm this, but this would be the most favorable environment. So now we have an idea as to how to react to these type of fundamentals. If we see lower inflation readings, we see higher unemployment claims, we see lower than expected consumer sentiment, and we see all of this coupled with dovish remarks from Federal Reserve speakers, we know that the most likely scenario that would prompt or play out would be strength in risk assets and weakness in the dollar, so we can adjust our portfolios accordingly and potentially be on the right side of the market as market participants. However, it is essential to understand the opposite side of the spectrum. So I wrote the opposite, right? To be reactive in case we don't get the one-sided scenario, which would be risk asset strength and dollar weakness. So it is essential to remain prepared and reactive in case the opposite scenario unfolds. Should we observe higher than expected inflationary readings in both CPI and PPI figures, alongside lower unemployment claims and upbeat consumer sentiment compared to previous data points, couple that with hawkish comments from Fed speakers, this would likely lead to one-sided dollar strength and weakness in risk assets, signaling an overall risk-off market sentiment, which would further weigh on the prices of digital assets and stocks. So now that that is out of the way and we understand vaguely how these fundamentals could potentially impact price action later on in the week, let's go over to the technical analysis breakdown, the thing that everybody, the vast majority of people have probably been waiting for, saying, Cypress, hurry up, get your speech over, da 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 da, right? Let's go over the potential implications that these fundamentals could have on the price action, all right? So let's go over, obviously, of course, the more favorable scenario, which would be lower inflationary readings, coupled with the Fed rate cut narrative remaining prominent in the market, dollar weakness, higher unemployment claims indicating labor market weakness, subdued or lower than expected consumer sentiment, dovish remarks from Federal Reserve speakers scattered throughout the week. All right. So in a one-sided scenario like this, where we see dollar weakness and strength in risk assets led by these supporting fundamental factors, what I would preferably like to see on XRP is for us to remain above the March lows, which we can see starting all the way back at the end of February when we had that lower inflationary reading core PCE price index year over year come out. March open up, and you can see that we respected those end of month February lows before price appreciated all the way up into roughly around 74 cents. I would like to see the significant quote unquote support level or key significant psychological level where we can clearly see investor demand at these lows remain intact, right? So when it comes to technical analysis, I would like to see, first off, these favorable fundamentals, creating a risk-on market environment. With that being said, the technical analysis plays that I would be looking for, give or take some slight retracements for market makers to better position themselves back down into a discount before seeing price appreciation, will be scenario number one, for us to see a slight retracement back down into 58 cents, to see a move higher up into the high 60-cent range, potentially even breaking back up into the previous highs at roughly around 74 to 75 cents. A deeper retracement down back into the lows of March and February at 55 to 54 cents for a turnaround in bullish momentum, or a continuation move from where we currently stand, a break above 62 cents, and a move higher from where price action currently sits. These are the type of scenarios that I'd be looking for intraday plays on XRP or price appreciation for us to come and target, as long as we see a favorable risk-on market environment, continued demand in risk assets, and weakness in the dollar on XRP, targeting anywhere as long as these March lows hold and prices above 58 to 62 cents, the highs of the 60-cent range, targeting this previous high at 74 cents, looking at 75 to 76 cents as potential take profit areas for intraday trades. Anything higher than 76 cents, I'd be looking at 86 cents. Anything higher than 86 cents, I'd be looking at $1 to $1.10. All right. And that would again be if we see a favorable risk on market environment driven by these fundamental factors. Now, let's talk the inverse scenario, because again, we always have to be ready and prepared for the opposite side of the spectrum to play out, being reactive market participants and not impulsive market participants. All right. So let's say, for example, we don't see a favorable risk on market environment. What I would be looking for on the charts, technically speaking, if we see these supporting fundamental factors weighing on risk assets, supporting dollar strength, which would be higher than expected inflationary readings in CPI and PPI figures, lower unemployment claims, upbeat consumer sentiment, hawkish comments from Fed speakers, leading to one-sided dollar strength. For me on XRP, if we cannot break above the 62-cent psychological level threshold and remain bullish above, that means us see some type of bullish break of 62 cents, retest, and continuation move higher. If we do not see this type of price action, at the same exact time, we see these fundamental factors playing out, and we maintain price action below 62 cents, I'd be looking for targets of anywhere between 55 to 50 cents on XRP to come back and revisit the March lows or the February lows from almost 2 months ago. And this would again be driven by a risk-off market environment, one-sided dollar strength driven by these fundamental factors. So again, just to reiterate, if we do not see a break above 62 cents, a favorable risk-on market environment, my first initial bearish targets would be a revisit of the March lows in this previous range, where you can see market makers saw a clear demand from roughly around 54 to 55 cents. So it would be nice to see a nice liquidation wick down into 55 cents. If we break 55 cents, at the same time, we see a risk-off market environment, I'd be looking for further bearish targets of 50 to 48 cents to come back down further to the February lows from the beginning of this year, right? So very easy, sound, simple, logical, technical analysis. With that being said, again, make sure that you guys are paying attention to these fundamental factors. You all can go and visit forexfactory.com to be paying attention to these things yourselves. If you want a community where we type out these fundamentals, we give our pre-planned analysis, we schedule Zoom calls, and give a vast amount of data and information in the form of sound and logical crypto-related research, then definitely consider joining our private community. We have about 70 slots left. We would love to have you on the team. As always, many blessings to you guys. Be cognizant, be aware, make sure that you're paying attention to these factors, pay attention to the price levels that I gave you guys. And as always, be cognizant, be aware out there, and I'll see you all in the next video breakdown.